Welcome back to the channel. My name is Brad, and today we're going to talk about oil. Woohoo! Who loves oil? Black gold, Texas tea, something like that. I don't know. Clampets. We're going to talk about the clampets today. There you go. USOY. Hey, 62.87% distribution rate. You got to be kidding me. That's a big number. Well, yeah. The number is the number. I keep on telling you, you can only take 10 to 15% out of the market. Forget about these huge rates. But, don't listen to me. You can take it all. So what's the prediction for oil? That's what it comes down to. So 2 articles linked below, not Seeking Alpha. They say, hey, oil is going to be somewhere around $76 to $78 by the end of next year. Well, that's right where it's kind of at. The problem with the fund, from what I've seen, is it started right around the top of the oil. And of course, as the oil price goes lower, guess what happens to your NAV? It goes lower. It's just a function. It's nothing new, nothing anybody's been listening to the channel is very familiar with. But there's a lot of volatility with oil. So when you do that, you should be able to make some money. Now, they're doing something different here. And it's something I should point out is they're selling puts. There is no call spreads. There's no synthetics. They're just selling a put. Hey, we're going to sell a put and we'll get some premium from it. So it's not even a synthetic. It's just, hey, we're going to sell put. See what happens. Roll those dice, because I cannot tell you the price of oil. But I can tell you that if oil price is stable or within a range, this fund probably will do okay. But I can't tell you that. Maybe an oil expert can tell you that. And if you want to become an oil expert, go for it. I just don't have the time. Now, when I look at it, I look at their holdings. They have a bunch of treasuries. And then they have the put. That's what they have. All they do is sell puts. Right now, as of time of recording, look at the price chart. Hey, we're at like $71, headed a little north. And these are short-dated puts. They expire on the 6th, so it's only a couple days, and they're going to collect the premiums. So that's a good sign that they're going to do this. Again, I'm only presenting the data. So, of course, Brad went back and did his testing. So let's bring up the test data. Test data shows, hey, your NAV is going down, but you can see I'm only pulling off my 8%, so you're only down a little bit compared to your NAV. And if the price stays stable or flat or just ranges in the between $70 and $80, that's a good sign. Yeah, keep in mind, it was started right around that mid 80s. So can the price regain? It can probably regain a little bit. You do get capped on the way back up. With anything else, it's not a call, but it's a put. So there's going to be some pluses and minuses there. Puts pay more money, by the way. So that's why your premiums are so good. But at the end of the day, it's all about your belief in oil. Is it just going to range? Is it going to just range between 70 and 80? If it is, this is a good bet. If it's not, and the price of oil goes down to $30, there goes your money. I mean, that's just the way it works. So let's look at this real quick on Seeking Alpha. When I look at the price, we're down almost 30%. I mean, it's just right down. Nothing else you can say. Total returns. If I look at total returns on Seeking Alpha, hey, it's almost breaking even, and that kind of corresponds directly with my chart. So double checking myself to make sure I'm not making a mistake, but looks like it's my chart. So the question ends up being, if you believe in oil, maybe this is something you get into. If you believe in oil is going to range between 70 and $85, this might be for you. It's not for me because I'm not an oil expert, but I wanted to cover it, and I'm going to cover gold miners in a future video. But I just wanted to make sure that you saw the data and you understood what you're getting into. If you're an oil expert, leave a message below where you think oil prices is going, because I don't know. It's a crapshoot for me. So I'm going to stick with something maybe a little bit better knowing, like, you know, where the index and where the other markets are going. But to each their own. Until next time, God bless.